What's good everyone? So in today's video, I'm going to be going over my 6-figure trading strategy. Verifiable proof of everything. As I've tried every single strategy out there. Every single indicator, every single time frame, every single session, everything. I've tried it all. And so have you probably. But you're still unprofitable. And I know how frustrating it is to feel stuck as a trader. I know how it feels to constantly blow accounts. Once I mastered burst plus liquidity sweep, game over. Game fucking over. I'll tell you that right now. Okay? All I had to do was fix my psychology from there on, and I became profitable. So now I'm here to teach you as well. So please do yourself a favor, take some notes, watch to the end. Let's get into the shit. So first of all, we have to understand what a liquidity sweep is and what it means, how we can take advantage of it and make money by using it. So when we talk about liquidity, you need to keep this in mind. Liquidity equals stop losses. Stop losses equals money. And money equals liquidity. So a liquidity sweep is essentially just a money grab, a stop loss hunt. Okay? Because whenever people have their stop losses below a previous low or above a previous high, there's also money resting up there. Okay? There's money resting up and down. Because stop loss equals money. Money equals liquidity, liquidity equals stop losses. So a liquidity grab on the left here is whenever it breaks previous lows, but then doesn't drive bearish, but instantly starts pushing up and rejecting that level, and then starts flipping bullish and continuing that overall time frame direction, which in this case is bullish. Vice versa in a bearish example. A liquidity sweep is whenever it breaks previous highs up here, right? And then instantly rejects that level and starts flipping bearish, continuing bearish in that overall higher time frame direction. Now, in order to make this strategy work, you also have to understand basic market structure. On the left, we have a bullish example with a low down here, a high up here, a lower high, and now anticipating a newer high, right? So a lower high, higher high, because this low is higher than this low. So that becomes a lower high and then a higher high, because this high is higher than this high. I hope that's not too confusing. Vice versa, a high up here, the low, lower high, and now everyone is anticipating a new lower low. The problem here is that there's a missing piece to this. Everyone is trading this way. Everyone is trading a breakout plus a retracement and then a rejection at that significant level right there. This looks clean, right? It looks like it's destined to win. But the problem is everyone gets taught this way of trading. And 99% of traders are trading this exact model right here. 99% of traders are also unprofitable. So you do the math here. If 99% of traders are trading this way, but 99% of traders are also unprofitable, simply doesn't work because there's a missing piece here, the liquidity grab. So your job as a trader and your job watching this video right now is to figure out what the top 1% are doing differently compared to those 99% of traders, right? So the top 1% are profitable, 99% are unprofitable. Now let me tell you this, the top 1% of traders are waiting for the 99% of traders to get stopped out, okay? Stopped out, liquidated, manipulated, whatever you want to call it. So you don't end up taking a setup like this. Buy, stop loss here, and then a take profit up here to anticipate the new higher high. Or a sell here, stop loss here, anticipating this new low down here. You don't do that because you're not inside the top 99% of traders. You are now inside the 1% of traders, right? So what happens here? We get a clear liquidity sweep right at this significant level. If you are experienced and you know this burst plus liquidity sweep strategy, you wouldn't have entered right here. You would now enter post liquidity sweep because there's a clear liquidity sweep breaking all these lows, right? In a bullish uptrend and sweeping liquidity, grabbing stop losses and just hunting money from other people's stop losses. Exact same thing happened here. It swept liquidity above these previous highs up here and then it followed that overall higher time frame trend. Okay, so now to draw the market structure out again, we now have a low down here, a high up here, and now this becomes the lower high and this becomes the higher high. So market pushed down instantly, right? And then liquidated and stopped out everyone that got in right there with these stops down here, and then it moved. So the market stopped out 99% of traders, and now it's allowing the top 1% of traders to enter. Vice versa, there's a high up here, a lower high. No, actually this is the lower high and this is the lower low. Now the rules to the strategy. There's setup confirmation, entry confirmation, and strategy stats. So setup confirmation. First of all, there needs to be a clear liquidity sweep. This is absolutely essential. You've just seen what happens if you don't wait for liquidity. You'll end up being the liquidity yourself. Keep that in mind. If you don't wait for it, you'll end up getting stopped out and then price moving in your favor. Second of all, it needs to be inside a volatile session. So this means Asia Open, London Open, New York Open, New York Stock Exchange Open, which is 9:30 a.m. Eastern, which I believe is 2:30 UK time, winter time. Third of all, it must follow the higher time frame direction. It's so much easier to take a pro trend trade following the higher time frame direction versus a counter trend trade and trying to catch a reversal. It's a lot easier. You're going to up your win rate and you're going to take a lot better trades. Now entry confirmation. You've got 3 ways to enter. First of all, there's a break of previous highs and lows, right? Second of all, there's a break of current high or lows. Third of all, there's a candle closure. Pretty self-explanatory, but I'm going to be explaining all of these later on anyways. So now some stats of the strategy and why it works so good. It is a 75 to 80% win rate strategy with an average of 1-to-1 RR, and the frequency is 2 to 3 trades per week. Now you may look at this and say 2 to 3 trades a week is fuck all. It's nothing. But trust me, that's more than plenty. Okay? It's much better to take quality over quantity and focus on less but better trades compared to more but worse trades. Now let's get into the charts for some actual examples. Obviously these setups aren't just cherry picked, taken in hindsight like all these fake demo gurus, right? These are taken live within my mentorship group. So if we start with this first trade, you might actually be able to see it. So what happens here? Obviously we're in a bullish trend. So we've got the top down analysis. We're following the higher time frame trend and we're looking for buy positions. But instead of entering right here, once we get down to this level or even, enter down here, it just doesn't make sense, because if everyone is trading this way and everyone's trading the normal burst or breakout, retracement to a level and then push, everyone is also unprofitable. And you shouldn't trade that way. So instead, what you should do is jump onto the lower time frames, right? Or on the higher time frame. Again, price is fractal. So what's going to happen on the lower time frame is also going to print on your higher time frame. So if we play price right here, what do? We instantly, at market open, funny enough, push down and liquidate these lows down here. Then we start rejecting. Now once I get confirmation that we're rejecting this, and this is a potential liquidity sweep, this is where you can enter. You can mark out inverse fair value gaps, mark out candle closures, you can mark out levels in whichever way you want, just to see price disrespected. And then once it's disrespected, we can actually continue bullish. So if I play price right here, we're pushing up right there, and then my entry was taken on this 5-minute closure right here. So again, now this right here on the lower time frame is a liquidity sweep. If you go to the 30 minutes, you can already see the candle. The bullish candle broke previous lows, broke these lows, and everyone that had their stop loss down here or below the wick just got liquidated. And it's funny enough also following the higher time frame direction. So it's an A+ setup, 85 to 90% chance of this playing out. What happens? Well, we end up entering the trade, stop losses below this liquidity, and we end up entering the trade on the candle closure. Go break even once it liquidates these previous highs right here, just to make sure that we don't end up being the liquidity for price to continue down, and then we just shoot up directly to take profit. So again, if you look at the 1 hour, you could have taken this on the 1 hour closure. You could have taken this on the 30 minute or even the 5 minute. So again, this works on all time frames, works in all sessions, preferably at open though. So that means Asia Open, London Open, or New York Open, because obviously market opens are going to bring in more volume. More volume equals volatility, and volatility equals liquidity. When there's liquidity, you'll see liquidity sweeps. So it works on all time frames again, in all sessions, on all pairs. Now this is NQ, okay, this is futures, but it also works on NAS, Euro USD, GBP, JBY, doesn't matter. And now if we go into the next trade right here, you can clearly see the same thing. We're bullish, we're printing a bullish structure. You can also see a liquidity sweep down here. I didn't take this because this isn't my session. I trade market open at NYSE, but it's the same idea. We push up, right? And instead of entering on this bullish candle closure right here, now this is the 5-minute time frame. Keep in mind, instead of entering here, stop loss below, or even stop loss down here, and then take profit up here, we don't do that, because what happens? You're going to get liquidated, and then we're going to move. And same thing up here, right? Break out to the upside, we can see we're bullish. This is top-down analysis. we're following the higher time frame direction, and we end up liquidating previous lows right here. So your entry is on the 5-minute closure, stop loss below. You can even zoom in on the 3-minute or 2-minute to put stop losses even tighter if you want to. I just prefer to keep it below the low. And then your take profit is at these highs up here. Now again, this has an 80 to 85% win rate. But these setups are not going to happen every single day. I take on an average 1 to 2, maybe 3 setups a week, because I actually take quality setups. I don't just spam trades and take random B and C setups. It's only A and A plus setups. And also one thing I want to do is talk about how this strategy is not 1 to 5, 1 to 10, 1 to 20. Obviously not. This is a sustainable strategy. It's a proper strategy with a 1 to 1, 1 to 5 sometimes, even a 1 to 2 with an 80 to 85% win rate. It's not some magical formula with a 1 to 20, 99% win rate like all these fake gurus out there are flexing. This is a pure legit strategy that works repeatably. It's also your lucky day because we've got a 16-page free PDF file going over this entire strategy. Literally everything we go over in our strategy is in here for absolutely free. So if you want access to this, join the free Discord in the link in the description. If you liked the video, please leave a like, comment and subscribe. And otherwise, thank you for watching. Rewatch it if you need to. And yeah, take care.